Welcome, everybody, to Benzinga All Access. It's Friday morning. We're here at the end of the week, and we're about to get started bringing you face to face with the CEOs of the companies that are moving and shaking this week in the biotech themed All Access, brought to you by Crescendo IR. We've got an intro for the All Access show that we're going to roll now. We'll get started with a couple of announcements, and then we'll move right into Benzinga All Access. All right, we're going to go ahead and get started with All Access in our first couple of presentations here in just a moment. A couple of house cleaning items and announcements before we get started. We're going to be bringing some changes to the All Access show next week. A couple of different format changes. We're going to be bringing a news headline section at the beginning of the show instead of jumping right into our presentations, talking about a couple of top headlines from the days before. We had the CPI data come out this week. That was a big topic for a lot of our live shows. We want to kick things off, getting people warmed up in the morning, just seeing what's at the top of the headlines for the day. So we'll be bringing a couple of new things to the agenda starting next Friday. But as we head into the weekend, we want to do a couple of other things here before we start the show. First of all, we want to mention Ticker, who is our sponsor for this show. Ticker is the company where you can get stock perks for owning the stocks of your favorite companies. We have an intro video for Ticker as well. We want to play that, and then we'll get started with our first presentation.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Awesome. And of course, you can get involved with Ticker, as it said in there, at ticker.com. Ticker has revolutionized how everyday investors are rewarded for brand loyalty by connecting consumers with perks for the brands they own. Awesome company. We work very, very closely with the Ticker team every single week. They've been our sponsor for All Access all year, and you can get involved with them and their team at ticker.com and get started tickering today. With that being said, we want to go ahead and get All Access started. We're going to dive in with our first presentation, and we're going to bring on Darren Minton. He's the president and CEO of Smart for Life. Darren, welcome to the show.
Hi, happy to be here. Happy Friday.
Absolute pleasure to have you here, Darren. It's great to have you here. Where are you coming to us from today?
Yeah, so this is South Florida. We're based out of Miami. We have multiple facilities in Florida and around the United States. This particular facility I'm at today does our food products. You can see in the background, it's just north of West Palm Beach.
Awesome. Okay, great. Well, Darren, let's dive right in. Talk a little bit about Smart for Life and what you guys in the company do.
Right. So Smart for Life, very exciting. What we are is it's a bread and butter business. You know, it's not a high tech company that may be producing an app that might be fairly hard to understand. We're making supplements. We're making health food products. It's a health and wellness company, and we're growing through acquisition. So we buy well-run companies with solid EBITDA, solid management teams. We add them to our portfolio, and we continue to grow. So it's both organic growth, it's M&A growth, combined with a lot of synergies that we'll talk about in a little bit. Right before our IPO, which was in February of this year, right before Russia invaded Ukraine, 3 days before. So our stock price was a little affected by that, like a lot of other companies, I'm sure, on the presentation docket today. We acquired 4 companies before our IPO, both in contract manufacturing as well as various brands that we'll talk about later. So we're both vertically integrated and horizontally integrated. The one thing that we didn't anticipate, and no one did, was COVID. And in some ways, that's turbocharged our industry. You know, health and wellness is now at the top of everyone's mind, even more so than before COVID. So that's something where we've seen incredible demand. But obviously, there's the supply constraints and everything else that the global economy is considering. So we have to combat that every day. But that's something that's on a level playing field with all companies in our space. But our vertical integration, helps with that. It keeps us kind of deeper into the supply chain. So at least we can have a little bit more control over the production of our products, make sure they're on store shelves, because it's not just margin nowadays. It's also just making sure you have product to sell at the end of the day.
Absolutely. You kind of talked a little bit about COVID there, right? And of course, COVID is one of those topics that we talk about every All Access for the last 2 years. It's something that every company's been affected by in one way or another. Talk a little bit about today, though, right? As we sit in the current market with COVID where it's at, is that still affecting you guys? Are you looking ahead to potential effects of a second or third wave? Do you think that's something that's going to affect the business going forward, or do you feel that we've passed that hump for the most part?
I think there could be other waves. I mean, look at the news even just this week talking about the latest variant being more infectious than even Omicron and some of the other variants. Obviously, luckily, people aren't getting as hospitalized as they were in the past, but there could be other waves. Luckily for us in our business and industry, especially in our supplements manufacturing facility, we're already fully garbed. Even before COVID, everyone's wearing face masks, full hair nets and face and bodyguards and everything in clean rooms. So it's about as safe as it can be. Even throughout COVID in 2020, we were viewed as an essential business by the state of Florida, county of Miami-Dade, and Broward County. So that's something that we were able to get through. Unfortunately, a lot of other industries, it's just pure luck. If you're in the hospitality industry, you're severely affected. There's no way around that. So, I think there will be more waves. I think there may be a possibility it'll affect the economy a little bit more. But I think there's certain things that people cut out in their daily lives. Obviously, travel is something. If there's another wave that's going to be affected, unfortunately, I think health is one of the last things that people cut. There's also other things happening. This is a crazy time. It's almost like 2008. Obviously, different reasons for what's happening. But you've got a pandemic that's once every 100 years sort of phenomenon. You've got war, with Russia and Ukraine, which is affecting a lot of things, even in our industry. Sunflower seeds. One of the largest exporters of sunflowers is Ukraine. Also wheat, different things in food products, especially for Africa and Europe. That's going to be affected the next couple of years. So I think there will be various supply constraints, but I think there's a lot of shift. And we're lucky as well that a lot of our manufacturing is based in the US. We don't have as much exposure to international shipping, but there's still, exposure to that. You've got some ingredients, whether it be maca from Peru or whether it be turmeric from India, that are just, that's where those products are grown and harvested. So there will be certain things that we'll kind of get through. But I think the past couple of years has taught the world, many countries, how to deal with COVID. And I think we'll get better at that going forward.
Absolutely. That makes sense. You touched a little bit too in your opening segment about the portfolio of 4 nutrition companies that you guys own. Can you elaborate a little bit more on these 4 companies? How do they tie into Smart for Life? What do they all do? And what kind of the business are they part of?
Sure. So our first company that we acquired is called Bonsante Natural Manufacturing. It's in a suburb of Miami called Doral. And it's a 25,000 square foot facility that focuses on supplement and nutritional production. So you can imagine anything at a GNC or a vitamin shop that's either a dry powder, a capsule, like echinacea, for instance, and a gelatin or a veggie capsule, that company can produce. We have a $15 million contract with Twin Lab. They're a very long established brand, really one of the first supplement brands that really, made a huge impact on the industry back in the 1950s and 60s, and they've been around ever since. So that company is really more of a contract manufacturing unit. It's kind of further down on the vertical integration chain. It manufactures not only third-party products for other companies, but also for ourselves. And that ties into some of the synergies with the other acquisitions. Our other second acquisition was a company called Dr. Scientific Organica. It's a little bit of a mouthful, but that's actually the facility I'm at today. You can see some of the food products in the background. Primarily focuses on supplement bars, protein bars, as well as weight loss products. So the gentleman that we acquired the facility from, Dr. Sasson Mulavi, has now come on and is our chief medical officer. He was the person that developed the cookie diet way back in the day in the late 90s and early 2000s, and could not find a manufacturer for the bars that wouldn't taste super dry. Even nowadays, a lot of bars, protein bars you have that are loaded with protein, very dry. You drink a gallon of water as you're eating the bars. These bars are fantastic. It's proprietary technology that we have that almost has a Rice Krispie type texture to it, while also having a great flavor profile. And also it's good for you. It's got a good amount of protein, carbs, and fats in the protein bars. You can see some of the gourmet ones behind my head. We also manufacture for others here. We manufacture for companies, including Battle Bars, which is up here. It's a company by U.S. vets from Iraq and Afghanistan that wanted to create a really manly bar that had extra protein in it. It's got great flavors. It's now taking off in the Midwest, and it's doing very well. We also make bars and other supplements. We just made a press release announcement a couple weeks ago about Milk Dust, which is something that we've seen a lot of increased demand for with the baby formula shortage. It's not a baby formula itself, but it helps mothers with lactation issues. And so we're seeing a lot of increased demand for that. That's something that's been very beneficial for our business. And we make protein bars based on the Milk Dust formula that's specific for women. So we have a lot of different things that we're doing at these two facilities. This facility obviously has a lot more brand presence for ourselves. Smart for Life, the company name, is also the main name of our bars that are sold in Costco, Walmart, and online through Amazon and a bunch of other online portals. We're seeing a lot of increased demand for supplements and protein bars, especially during COVID. It wasn't just supplements, people trying to stay healthy that way. It's also, hey, don't have toilet paper, and also need something that's a meal replacement that I don't have to heat up that takes a lot of time. So protein bars are fantastic. And in fact, in March and April, we announced 100,000 protein bars that we were able to ship over to Ukraine on cargo airplanes to Poland and then across the border to help out folks in Ukraine as well, because they're a great meal replacement. Put them in a backpack somewhere else. You don't have to heat anything up, and it's a full meal. So that's something we're doing. The next two acquisitions, smaller, Nexus Offers. It's affiliate marketing and digital marketing. So it's the most unique of our acquisitions so far. But what's great about it is it provides a lot of online awareness through Facebook, other affiliate and social media channels, and drives awareness through funnels to landing pages for nutritional supplements, as well as other industries. So for us, that's great. It helps turbocharge all of our sales online for Smart for Life products, for other products, and something we can use with our contract manufacturing customers as well. And then our most recent acquisition, GSP Nutrition. So now we are owners of the Sports Illustrated Nutrition brand, which is very exciting. So we're working with Authentic Brands Group, which is a very large company, $12 billion roughly. They just acquired Reebok a couple weeks ago or months ago from Adidas for $2.4 billion. And they're the ultimate owners of Sports Illustrated. We now have a licensing agreement with them and can make both supplements as well as food products under the Sports Illustrated brand. So if you go to sportsillustratednutrition.com, we've already got that landing page up. We're now populating that with the products. We've finalized that, and then we'll start to see some sales from that in the next quarter or so, which is very exciting. And now we're working on more acquisitions now that we're public.
That's awesome. So the acquisition pipeline is something I definitely want to talk about. But first, the Sports Illustrated Nutrition Company, one that we were really excited to chat about coming into this. I would imagine, and maybe you can give us more color on this, this probably opens some other doors for you, gives you some other opportunities, maybe just the branding and the brand recognition of it. But being involved with a company on the Sports Illustrated side has got to be very beneficial, I'd imagine.
Absolutely. I mean, it's a brand that everyone recognizes, right? It's been around for 50 years, both for athletes as well as people that aspire to be athletes. You know, this isn't just going to be taken by the LeBron Jameses of the world, but it's also people that want to be healthy, you know, have a very clean diet as well as clean nutritional supplements in their body. And I think there's going to be a lot of increased awareness, not just from us, but a lot of other ABG's partners with Sports Illustrated going forward. You know, I think you'll see a lot more as far as apparel, a lot more as far as nutritional products. Obviously, we're involved in that aspect of it. But ABG does a fantastic job with a lot of their brands. They own Brooks Brothers, Forever 21. They own a lot of celebrity likenesses like Marilyn Monroe, Elvis Presley, the new Elvis Presley movie that's coming out. So there's a lot of opportunities for cross-marketing. There's a lot of opportunities for us as well. We have various distribution channels upcoming through some of our next acquisitions, like Greens First, that are in doctor channels where we don't have a huge presence right now. And some of those partners also have a lot of gym connections through various high quality gyms like Equinox and others. So that's something we're looking forward to as far as enhancing that distribution channel, starting off online just to get the awareness started, but then starting to penetrate retail stores. You know, a lot of our products for Smart for Life are already in Costco, Walmart, and other big box retailers. But Sports Illustrated, that's something where if you see that on a store shelf, whether it be Target or CVS, it's an immediate brand recognition. Like, oh, that's product. Interesting. It's a label I kind of recognize. But we want to make sure that as well, it's high quality. Last thing we want is for anyone to see the brand, get that awareness. The first thing people do nowadays, everyone is very in tune with labels. It's not like the 80s where people just buy stuff because it's got a nice cartoon character on a cereal box. People now take control of what they're putting in their bodies. So when we manufacture this ourselves, we make sure it's the highest quality ingredients, that it's going to have, we believe, some of the best reviews in the industry, so that when they review it on Google, as soon as they see it in the aisle, they see, decent reviews, like, all right, let me try this out. People realize nowadays it's not just about a brand; it's also about making sure that it's a solid product behind it. So we want to have both of those things lined.
100%. That makes a ton of sense. And let's use that to build into the next point too, right? The acquisition pipeline as you move forward. When you're looking at growing the business and the companies that you want to acquire and be a part of your brand, when you're talking about this quality and making sure that what you're offering is actually up to par and of quality, not just the branding side like you talked about. What kind of companies are a fit for you guys on the acquisition side that are going to make your brand better, but also bring that quality to keep you guys in line with what you want to offer to the public?
That's a great question. I mean, it's something where, we're looking at both profitability. Number one, we want to buy EBITDA positive businesses, as well as management teams that are strong and that can help us grow, continuing going forward. It's both acquisition growth, but also organic growth. So we don't want to acquire a bunch of companies where we're going to see attrition. That's kind of a faux M&A strategy. We want to see all those things aligned to see that hockey stick growth going forward. So when we're looking at targets, synergies are very important. Perfect example is the next acquisition in our pipeline, a company called Sudamed Worldwide. The brand, though, that's known by consumers is called Greens First. It's sold in doctors' channels. It's basically vegetables in a capsule. It's been sold for about 15 years. And it's really as simple as that. Doctors, if you're not getting enough vegetables in your diet, doctors in that network will recommend, hey, look, just like they might recommend vitamin D, it's not a drug or an OTC product, it's a supplement. They say, look, you need a little bit more vegetables. You're not having enough salad. Here, take this supplement. And it's great. And that brings us into another channel. So the synergies are fantastic because we're not currently selling a lot of our existing products in doctor channels. That gives us an opportunity to potentially, cross synergize and pollinate. So we can take, protein bars, maybe have a Greens First protein bar that's introduced into doctor channels. Likewise, their product, is just beginning to be sold online over the past year, especially during COVID, right? People weren't able to see their doctor as much for at least that year or so. But we're experts in that. So we'll be able to use our knowledge of Amazon. We just announced a few months ago that we were part of the Amazon Accelerator Program. So we were selected by Amazon to help with increasing their presence in Singapore. So Singapore is a English-speaking market, ironically, and it's a predominant language there. So we're able to use our existing products using Amazon FBA and start to sell into Singapore. So that's something where we can take our Amazon expertise and help the Greens First brand. And the other major synergy with a lot of brands that we may acquire is we can manufacture a lot of those products in-house and have more control over the process. So for Greens First, for example, about $1.8 million a year for them is cost of using an external third-party contract manufacturer. So they're a brand. They do all the marketing. They get all the network set up, but they don't manufacture the product themselves. That's a cost for them. So that cost, even though it will still remain a cost for that unit once we acquire it, that becomes extra revenue for our other subsidiaries like Monsanto Natural Manufacturing. We can manufacture those powders. We can manufacture those capsules at our other facility. We're not going to do it, immediately the next day. We'll do it in a synergistic way that's thoughtful to make sure we don't have any disruptions in the supply chain. But that's something that becomes an extra benefit, helps all of our companies increase their revenue, as well as maintain quality control and also maintain, that level of reliance and comfort that we have to make sure it's on store shelves.
Awesome. Makes sense. And when you're talking about this acquisition strategy too, from what I've read and what I've looked at, this is a buy and build strategy, right? Where you're aiming to create a vertically integrated company. The objective is to aggregate companies generating a minimum of 300 million in revenues within the next 36 months. Is that kind of encapsulating what you guys are looking to do here?
Yeah, absolutely. And it's in our SEC statements, in our 10K. Obviously, we're a relatively recent public company. And the only way to achieve those metrics, clearly, we couldn't just achieve it through organic growth. And even growing, 10, 20% a year, it would take a while to get to those sort of metrics. But by buying companies that are well run and not to fixer-upper strategy, other management teams, God bless them, that could be something that they can focus on. For us, there's too much risk. And that's even before COVID and before everything else going on. We want as much risk mitigation as possible. There's nothing that's risk less. That's 100% guaranteed in the world, but we want to mitigate as much as we can. So by buying companies at positive EBITDA, keeping the management intact, we call it keeping the DNA intact for at least several years. We have a structure where based on a total purchase price, anywhere from a 4 to 6x EBITDA multiple, we'll split that up between, for the seller, what attracts them to the deal, a portion of cash, usually 50%, sometimes more or less, depending on the negotiation, and then 25% stock, 25% note. What we've done in the past is we've had a convertible note that converts into stock to keep people attracted to that based on where our current market price is. Right now, we're doing a financing for the Greens First acquisition, which again, we anticipate closing before the end of July based on our previous announcements. We are doing that mostly with debt. The markets right now where they are, especially with our share price, got hit a lot with the Ukraine and Russia war. We, as a management team and looking out for our shareholder value is incredibly important for us. We are not going to do any crazy dilutive acquisitions or crazy dilutive financing raises during these times until our share price gets back up to where we think it should be. Luckily for us, based on the way we structure our transactions, if needed, we can do them with 100% debt. And that's what we're doing now until we get the share price back up. The nice thing is I think we're under the radar a little bit, with the new IPO. We were in our quiet period. Now we're out of that. We've already publicly announced in other conferences like the Noble Conference, H.C. Wainwright in Miami, that along with this acquisition, included in that raise is a more significant marketing budget for IR to get the word out so people kind of know about us. It's synergistic as well with the different products we're offering. So it's not only just making awareness for the public company Smart for Life Inc., but also for our products, including Sports Illustrated Nutrition. It's very synergistic as far as making awareness for our brands, for our company, and ultimately for our shareholders. That's something that's very important for us.
Fantastic. Okay, I want to touch on something else too that I think you might have mentioned a little bit earlier, but your Dr. Scientific Organica division. You guys are using this to accelerate the production of milk dust, increase milk supply, and nourish the postpartum body. Talk a little bit more about this. How are you guys growing this, and why is it so significant?
Yeah, so it's a great example of something that may not be a brand that we own, but it's a really interesting story. So Katie Pickett, who is the founder of Milk Dust, and this is all online, she has a great video that describes her company. I invite people to check it out. That was actually in the press release. When she had her 4 babies, had problems lactating. And sometimes, especially nowadays, you could be the best doctor in the world, but if someone has a personal problem, it's going to be their life mission to get that fixed, right? So she went out and helped develop a formula that helped her with her lactation. And also help maintain her weight. Sometimes you can have a product that can help with lactation, but also can bloat you significantly. And she worked with Dr. Sass because she was local, also in the South Florida area, and developed this formula called Milk Dust. And so that's her formula, her brand. She didn't do much marketing with it. It's really just through social media, online, Instagram, Pinterest, things of that nature. And it's started to take off. What's great is we manufacture that product in addition to Dr. Sass, who's now our chief medical officer, developing the formula. And so we've seen a huge increase in demand just in the past couple months. Again, even though it's not a baby formula replacement, it still helps, babies if the mother is trying to lactate or has lactated, and this increases milk production. So it's something that we think is fantastic. It helps moms. We want to, and because we're the manufacturer of the product, and we can ramp up production, which was the press release, and continue to help moms, in that sort of thing. So that's something that's fantastic for us. In some ways, we view ourselves a little bit as an incubator, if you will. We can help brands, whether it be for protein bars or for powders or other supplements, especially if they're smaller starting off, deal with a lot of issues that they may face, whether it's label issues or whether it's FDA compliance. And we have full-time formulators on board that are used to that. And so we can help them not only with their marketing and their branding, it's also something that can help them accelerate their sales on Amazon and whatnot. It also gives us an opportunity to see if a company really grows and is an exponential brand. It's a potential acquisition for us in the future as well. So that keeps it exciting.
Awesome. Yeah, I'm having to kind of prioritize questions here as we're getting close on time because we really didn't get to everything that I wanted to. But I think the most important thing that I would want to hear from you is the second half of 2022. It's been a rough year, I would say, for a lot of different companies, again, as we still are coming out of COVID and the rest of the effects, and we discussed that. But the second half of this year for you guys specifically, you've talked about the nutrition companies and some of the doors that the Sports Illustrated partnership have opened for you and things like that. What's the roadmap and the next objectives and steps for you guys in terms of growth? What are your priorities? What are you guys focusing on in terms of achievements for the rest of this year?
Yeah, biggest priorities is maximizing the synergies. We've already done a little bit of that with our existing companies. Getting more acquisitions done. We want to get this Greens First acquisition done before the end of July, like we promised everyone, which we will. And we want to get more acquisitions done. We've already announced that in our pipeline, the acquisitions are getting larger. We got 40, $50 million revenue transactions that are further into the pipeline. And, getting those acquisitions done is really when the hockey stick starts to take off. That's when you really start to see the synergies start to take hold as well. In some ways it's counterintuitive, but it's just as easy to acquire a $50 million or $100 million business as it is a $5 million business. Sometimes it's actually easier because it's more likely to be audited, better ERP systems and all of that. So over the next year, and I know we have limited time, it's really taking advantage of that acquisition strategy, getting $100 million in revenue, like we said, within the first 12 months, 300 million in the next 36 months, and continuing to hit on our acquisition strategy despite these crazy market conditions.
Makes sense. And time for one more too, I guess. When you're talking about your customer acquisition strategy, right, which is the other thing I kind of wanted to cover, but when you're getting your products out there on the market, is this direct marketing? Is it going through, like I said, again, some of these nutrition companies that you own? What's the strategy for getting your products to market and getting them in front of the wider audience?
Yeah, it's a great question. What we try to do is be omni-channel. There's certain companies that say, oh, hey, dealing with the big box retailers is just not worth it. It may be a little bit lower margin than online. It's still margin, right? So what we want to do is be in as many places as possible. Again, whether it's big box retailers like Costco, Walmart, whether it's online through direct sales on our website. That's where the highest margins are because it's directly to us, but also Amazon. Even though Amazon may have some fees with some of their FBA structures, it's still the biggest marketplace in the world. And they have great distribution capabilities. So again, we want to be as omni-channel as possible from our marketing strategy. We utilize, SEO. We utilize Amazon Accelerator program. We utilize a lot of marketing that's driven through retail channels, whether it be samples and things of that nature. And we're also going to be starting to increase, which we haven't done in the past, some more traditional things, whether it be, commercials starting off or other, direct marketing and synergistic campaigns to really bring awareness to all of our brands. And luckily now we can promote Smart for Life as a company, along with a lot of our sub brands, and see a lot more throughput just based on the size of the company as we continue to grow. So that's exciting.
Outstanding. All good info. Again, Darren, like I said, we didn't even get to as much as we wanted to, but we got a ton of good information from you. Darren Minton, CEO of Smart for Life. Thank you so much for joining us today.
Thank you for having us today. Appreciate it.
Absolute pleasure. Darren Minton, CEO of Smart Life, joining us there. We're rolling into 9:40. We have a content gap. We're now going to be led on an update of the market by Senior Mitchell Hotch, a market update that Sophia from our events team would more than likely describe as bussin'. As long as he's in the studio, we'll bring him on now and get him started. I don't know where he's at. There he is.
Let's go. Ready
How we
to
doing,
go.
buddy?
Let's get after it. Taking a look at the market today, it looks like we bounced today off of retail sales. So better than expected retail sales. It looks like you went to go buy that suit this week. So I'll give you props on the suit. Let's go ahead. Let's dive into the overall market. SPY coming up after the release of those retail sales, coming better than expected. Expected was a 0.8 and we got a 1.0. So better than expected there. We're going to pay attention at 10 a.m. You'll get the University of Michigan consumer sentiment to hit the tape. That's going to be something definitely to keep watch. That could flip. That could change the market here. Let's take a look at what's doing well right now. So what's hot, what's not. Consumer cyclical getting a little bit of a push right here. What is doing well there? You can take a look. Gambling taking the lead. So stocks like DKNG having a good day right out the gate. I was looking at this one right out to get a 1150 pullback. I got down there to 1154, but really just pushed off there towards the 1190s. A lot of this coming off of those retail sale numbers. You can also look at resorts and casinos. Look how this is all green here. And definitely a stock like Penn having a good day there. So continue to watch that, and we'll see if this can continue pushing. You got auto truck dealerships, leisure. Keep leisure on watch because this is going to be interesting to watch. Stocks like, let's say, GME to see if it can push on up there today. AMC, let's see if those can get moving, of course. But if you're looking at leisure, what's doing well right now? Looks like reopening trade, or you could say the travel trade is on right now. NCLH pushing up well. CCL having a good day. Let's see how the airlines are doing. American getting a little bit of a bounce. Let's see how lodging is doing. Hilton up today also. So keep this one on watch right now. We are seeing a lot of consumer cyclical take lead. You can look at Hyatt. We'll see if these can continue pushing. Of course, what are the earnings that we got today? We got a lot of financial services that come on out. We got Wells Fargo, we got BlackRock, we got PNC Financial, we got United Health. So a lot going on here. I can give you guys some of those numbers. Let's first take a look at Wells Fargo, how that's performing here. Look at that really push right out the gates here. I'll let you guys know the numbers here, but definitely keep this on radar. We'll see if this can continue pushing. Let me just go ahead. All right, let me put a banner up here so that you guys can see this. This is going to be their earnings here. So just check this on out. Wells Fargo here coming in with an EPS at 74 cents, missing the 86-cent estimate. Sales were at 17.3, missing the 17.6 billion estimate. But why is this running? Well, a lot of this is running off of the Citigroup earnings that was really well. This actually drove the industry. You can see it's pulling on back now, trying to catch the VWAP. For my live traders on out there, I would look for this one to hold VWAP, continue leading on up, and the other banks to kind of take off also. You could look at BlackRock today, see if that can kind of push. It did push at the open. We'll see if it catches the bid here. What is dragging us today? Dragging us is actually utilities. It's down about 1.27% from the open. That's what I like to pay attention to. So you can see today stocks turning around like Duke, SO, Southern Company, Excel Energy. So a lot of these energy trades falling off here, and also basic materials continuing to come down here. Stocks like steel getting hit, silver getting hit, aluminum, gold. A lot of this also is going to show me that the dollar is still strong right now. So we'll keep this on radar. We'll see how kind of the dollar index continues moving on up and how that affects gold and silver. Looks like it's really definitely hitting it now. All right, we'll see what happened in the overall market. The SPY is coming down now, guys. It did do kind of like a head and shoulders look here. We'll see what happens if the SPY is able to hold the 381 on pullbacks. That's what I'm looking to see as we're trying to get back up there towards the 386. Of course, we started the day off of a low there near the 376. So we're coming back. We'll see if we can hold some of these gains. Let's take a look at some of the big components, right? What's going on with stocks like Apple, Microsoft, right? Those are definitely ones to watch. I talked about how we were going to look for a move. Could it hold above the 150? You could see here, it went through the 150, tried to hold there, rejected that breakout there on Apple. Let's go ahead. Let's take a look at Microsoft, trying to push up also through the 258. Can't hold it right now. Goog, I know a lot of people are watching this because of the split. It did push a little bit out the gates, now pulling on back. Just be careful as we're starting to see some pullback out there. UNH coming in with some good earnings today. They had an EPS beat of $5.57, beating the $5.20 estimate. Revenue was at $80.3 billion, beats the $79.68 billion. And you guys are seeing UNH hold the pullback here. So that's a good sign as long as it can hold that pullback. If you take a look at the daily chart, this is definitely at the top of the range. We want to see a nice move come back after holding right over here towards these wicks. This is around the 518.70s. Right now, you're at the 518.70s again. Let's see if this can really hold this pullback, hold the 515.15s here, and then push right back up through the 527. Doesn't look bad there, UNH. And for this being mentioned, it's actually causing a lot of the healthcare plans to move on up today. Stocks like CVS, so keep this one on your radar. If you take a look at healthcare, it's the second leading sector right now, and it actually just took first place here. So keep that one on radar. Energy flipping too, so I'll talk about that just up next. But healthcare, CVS and UNH definitely leading the way there. We'll see if that can continue making a green day. All right, so energy getting a little bit of a bounce. I was looking actually to maybe take a shot there in XOM on the pullback here. It looks interesting. Now you're starting to get a little bit of a bounce. We'll take a look at some of the other names like Oxy and Chevron. See if these can really start moving here. And of course, what I like to usually do is if I'm looking for these, I can also look for a day trade in day trading vehicle like Gush, especially when this one does big pullbacks. I'd like to catch it for a nice reversal back. We'll see what happens there. Of course, there's been a lot of movement lately. You can see ConocoPhillips also getting a big drop there. and then we'll look to see if it recovers. Oil has been pulling back significantly, but we'll see if this can be the day that it starts coming back into play. All right, let's take a look at the Qs. What else is going on out there? The Qs are pulling on back here. Let's take a look at Tesla. Tesla had an interesting setup here. Let's go towards the hourly. You can see how it's been trying to get back up through the 730s, getting up there towards the 750s, but rejecting that move right out the gates here now. Now I'd be watching for a downside action to get through 700. If that does happen, you're going to see this really start dragging the market. It's pulling back there to the 718s, really needs to hold over here at least to the 712s. If it cracks 712s, you could see some continuation down towards yesterday's lows. And we were all the way down there below 700. We were down to 688 on the lows there. So watch out. We'll see what happens there in Tesla, pulling on back for the time being. All right. And then, of course, Pinterest had news out there. So if you guys have seen Pinterest move a significant amount, there's a lot to keep in mind here with Pinterest. Shares are trading higher after following a Wall Street Journal report suggesting that Elliott Management took a stake of more than 9% in the social media company. Pinterest trying to get back up above the 2050s, cannot hold it there. So it could give up some of these gains. Of course, it's coming off of a rumor, so it could be pushed out. The stake was never happened. Or it could also be that, hey, maybe this has gone too far on this report and is going to give up some of the gains coming down maybe towards the 19s, 18s. We'll see what happens today. Pinterest turning around after not being able to hold the 2050 area. One of my best trades that I was looking for was a short on Lucid. I haven't been taking the trade on here because I've been talking to you guys, but we'll see what happens in Lucid. I think this is a really nice setup to the downside. Same thing I feel about Starbucks. I did see that they were closing about 100 of their stores. A lot of this relating to safety issues. I think Starbucks is going to have more issues. As what have you been hearing about Starbucks is a lot of mention of labor unions. And when you hear mentions of labor unions, what does that usually come with? Raises in pay and wage, inflation probably going to hit this stock and hit their margins. I think this is a great short opportunity on Starbucks. But hey, to each his own. You guys determine what you guys like. All right, let's go towards technology. What is going on in technology? We're now down 0.45 from the open. So not being able to hold here, but what is holding up? So I see some software and application names kind of making a little bit of a surge. We'll see if these can continue lifting. Let's see the kind of the higher cap names. What is moving up? Uber up about 1.2. Now about 1.8. We got SAP up about 1.6. So these are some of the stocks that are making some nice lift here. And if you want to take a look at a cheaper name, you got SRAD making a little bit of a lift, Sports Radar. I've done an interview on them before. They're sports licensing data. And you guys can see here a nice little pullback to VWAP. We'll see if it gets back through that 780, holds pullbacks towards the 748s and get another lift up. All right, let's go to Roblox. I did see that one up earlier. Now it's pulling on back. Let's see ARKK to take a look overall at growth. Look at that turnaround. It was setting up for a nice little push. Now really getting dragged down here as we're probably seeing a turnaround in the SPY overall. Let's take a look here. Boom. There you guys see it. It's probably getting hit. Yep, and getting hit right through that 381. Let's see if it quickly recovers here. I'm going to go to ARKK to take a look at what are some of the names that are getting hit the hardest. CRISPR, biotechs turning around here and really getting hit on the downside. With that one, I would expect Fate and Beam to also get hit. And look how those are getting hit. DNA also getting hit there. So definitely the biotechs are actually pulling back right now. So just be careful out there. We're definitely seeing a turnaround in biotechs today. ARKK also has a lot of software names like Zoom here getting down there. Hood down about 1%. Twilio down about 0.39. Definitely a lot of these stocks definitely heading towards the downside after getting some bounce here out the gates. Roku actually getting a little bit of a bounce and it's still in the green, but definitely heading down really fast here. Let's take a look at the SPY. SPY is continuing to head on down here now towards 380.60s. This is what this type of market will do to you. It's a choppy market. And so you have to be careful. There's too many traders out there that are getting caught in trades. And a lot of it is that there's a lot of chop, right? There's not a lot of trend following right now. And so a lot of times you have to sell faster than you expect, run towards those profits, and definitely cut those losers as quick as possible. Like always, it's not financial advice, educational, but this is what I've been seeing out there. And you don't want to get caught in the chop because that's an easy way to just keep giving up capital. It's all about capital preservation right now. Looking at stories like we have right here on All Access. Look at these stories. Look at the fundamentals. Look at the technicals. Wait for everything to make sense. That's when I really like high conviction names. And I'll continue to watch to see if we can get that kind of moment where we can actually start taking some of these trades. Right now, I don't see it as a time that you're trying to go crazy and dipping in. But like always, it's all about your time horizon and what you see fit. All right, let's continue going here. If you guys got something to mention in the chat, I'm going to actually pull up a stream here. I don't have you guys' comments, so I want to catch you guys' comments. What are you guys taking a look at? If there's any stock that you guys want to call it out in the chat. All right, EVgo getting ready. Let's go ahead. Let's take a look at EVgo. I had no problem with that one. It does have catalyst. Let's take a look here. EVgo here. EVgo pulling on back here towards 697. Tried to make a move towards 725. Wasn't able to hold it there. I would be looking at the hourly chart, right? And see where the hourlies make sense for a pullback. And so like if we can measure this last move here where it pushed on up, you can put it to the highest peak, but I like putting it to the highest close. Let's put it that to the 730. 50% retracement gets it towards 675. And then I would look for between 675 and the 662 area for it to catch a bounce there and make its way back up through 7. One of our best trades yesterday, GOEV, turning around today. It did make that move towards 5 yesterday. Turning around a little bit here towards the 425s. I'd look for it to hold $4, catch a bounce, but we'll see what happens in these names. A lot of that's going to depend on some auto manufacturing and will we get a lift in this industry today or will we get a turnaround on the downside there? You can see the SPY trying to catch that 381.10 bounce there. We'll see if it can hold there. More chop on the trading action. All right, what are you guys taking a look at? Looks like AMD being mentioned in the chat. I see LABD was seeing an overpriced range of XBI yesterday. Yeah, nothing wrong with taking a look at that, Aaron. I think you had a good look there, but let's go to AMD here. Jeffrey's want to take a look at that. Let's do it. All right, Jeffrey, pulling back there to the 78, and tech has been really strong here. Showing a nice bottoming action. You could get some pullback maybe towards the 77.50s. Anything below that, I would be careful because it looks like it could wash out towards the support down by the 75s. We'll take a look here. As you can see here, there's some resistance that's coming into play right above the 79.50s. You got a bunch of wicks up there. So let's see what happens here. If you can get back and close above 80, this will start looking like a bottoming chart. But if it doesn't get back and closes above that 80, it could very easily stay in this bearish pennant and just come back and take out 75. So just be careful on the name. Like always, choose your own risk assessment there. All right, seeing a little bit of bounce there. GME splitting next Friday. No, it's not next Friday, Urban. It's actually on the 18th. And so the 18th is the day you want to be watching. When the actual, I think the split actually takes effect. The dividend split actually takes effect on the 21st, but you need to be getting in on that 18th date if you're trying to grab that GME split and trying to see the run into that. I was actually taking a look into that play, Urban. GME pulling back a little bit here. I would actually let it pull back. Want to see it hold the 130s, and then on Monday, see if it could come back pushing towards 145 and 150. That will also keep my eyes on, of course, the AMC Dragon. I talked about today, we could look for a pullback towards the 1480 area, and then we want to see it hold 15. You're seeing it retrace that. We'll see what happens there on AMC. All right, MRO took a swing from yesterday's low, sold pre-market. Not a bad attempt there. I actually like this look here. I might actually, you know what the hell? Let's take a little live trade action here for us. Actually, I was been liking for oil to come back today, so I'm going to take it right there, guys. Just got in there at 2063. Let's hold towards a 2048 support here. Let's see it get back above VWAP. We want to see it recover. If it doesn't recover, of course, we'll get on out. But this is the way we take it. And I've been watching to see if oil could come back. It was starting to get into the green, pulling on back a little bit here. Let's see if it can take a lift. All right, healthcare is now leading, but just barely into the green by 0.1. What's in our red area? Once again, we've talked about it, utilities, basic materials, but now consumers cyclical pulling back big, giving up some of that gap there. You can see it right here on the chart. It's very important to kind of watch when you get those gaps up and gap downs here. But definitely I'm going to keep on watch to see if this can get back on up. Some of these names were looking good, like DKNG. I'm sure it's pulling on back there right off of the VWAP now. Stocks like Penn pulling on back. We'll see if these can get going here. MRO getting a little bit of a lift. Not a bad little trade here from the 63s. Can we get it up there through the 2085 level? That's where I'll take the first profit. Then look for a move towards 21 in Marathon Oil here, trying to make a little bit of some quick trading action here for us. We'll see what happens there. You can take a look at maybe like XOM getting a little bit of a lift. Gush, we want to see that one take off. Not really rejecting that VWAP, but holding above that orange line you see here, and then taking that next step up. Snap. Oh, Snap. Yeah, nice little pullback there in Snap. I know they have earnings next week. Looks like you got a nice little pullback towards where you broke out from around the 1350s. This is a lot of what I've been seeing this market do. Top to bottom range. Look how the SPY now breaks out. This is one of those things that you just got to be careful of. And so the way that you can get around this is by paying attention to deeper time frame charts. That's how you're going to be able to get around some of these big hourly type of swings. They're really big. I mean, and think about it. You're going from that 383s down there to the 380s and back up towards 384. So you have to give yourself room. If you're in kind of that 1 minute approach, a lot of the times what's going to happen is you're going to see the stocks go up. You're going to get stopped out for the bottom of the range, and then the range comes right back up through the top of the range there. And so I would say definitely take a look at the hourly charts. You're going to see how this kind of held that sideways push there. That's what you want to be looking at. Bigger time frames to get around some of the volatility.
Good stuff, Mitch. It's a solid market update. Good stuff, man.
I tried my best there. We'll see what happens with that MRO. And catch me in the chat and catch the stories that are coming on up. Like I talked about it. This is the time when you really need to go ahead and develop your process. Look at stories. Understand that there's a lot of times different variables that are important. We have technicals, we have fundamentals, and then the stories from the stocks themselves. We saw in 2020 how much story could really push stocks. So we'll continue to see what other stories come out of right here on All Access.
Indeed. All right. Thank you, Mitch. Appreciate that. Bringing the heat for us. We're going to keep on rolling with our next presentation. We're going to talk next to Andrew Simpson, the chairman and CEO of Heart Sciences. Let's bring him on and get rolling. Andrew, thanks for joining us. How are you?
Yep, I'm good. Morning. How are you?
Pleasure to have you here, Andrew. Let's get things kicked off. A lot of exciting things to discuss with you. First and foremost, Heart Sciences. Tell us a little bit about the company. Give us a profile of what you guys do.
Okay, so we are basically applying artificial intelligence and advanced signal processing to the EKG. And the reason for doing that is we're basically reinventing what it can do so it can be much more useful for detecting heart disease in a frontline environment. And as you know, everybody knows somebody that's keeled over and had a heart attack on an unknown basis, and that's what we're seeking to address.
Fantastic. Okay, another thing I want to address too is the name change, right? From Heart Test Laboratories to Heart Sciences. Where are you at in the process of the uplist and the NASDAQ listing? Can you give us a little more insights into what's going on there?
Yeah, so our incorporation name is Heart Test Laboratories, Inc. So that's on NASDAQ, but our trading name is Heart Sciences. And we intend to merge those together. But we call ourselves Heart Sciences, but you'll find us under Heart Test Laboratories.
Understood. Okay, and you guys announced a pricing of a $6.3 million initial public offering in June, correct? As far as I know?
Yeah, we've just done a small public offering to get ourselves on the market. That's really to give us the runway to get through FDA clearance next year, at which point we see great things for the product.
Awesome. Okay, let's talk about FDA clearance, right? As a pre-revenue company, you don't yet have FDA clearance, but you're close to the FDA resubmission and the revalidation of those FDA results within the next 3 to 6 months. Can you give us a progress update there and what you guys are working on that angle?
Yeah. So we're what's called a de novo medical device, and basically that means you're a non-significant risk device, but the FDA say you're doing something that has never been done before. So about half of companies, when they do a de novo, have to come back a second time around. We're in that bucket. So when we submitted last time around, the FDA basically gave us a very, very clear landscape of a small number of things we needed to address, and we're very close to having done that. The main one is a new clinical validation study, which we're doing of about 600 patients, and we're over 90% of the way through that.
Outstanding. Okay, so when you're talking of MyoVista, which is something you guys are working on, being able to offer ECGs at an affordable price, how much more affordable is your product going to be? But more importantly, what's the driving factor behind the lower costs in what you guys produce?
Yeah. So the challenge at the moment is if you're a cardiologist, you've got fantastic tools to assess whether somebody's got heart disease. You've got cardiac imaging devices like MRI scanners or echo devices. But the poor old frontline physician who's having to deal with people coming through his door like a GP, he basically doesn't have anything. He has a risk assessment. Are you overweight? Do you have a family history? And he has what people think of as a screening device, which is an EKG. But the EKG is very poor for anything other than electrical abnormalities of the heart. So if you've got CAD or you've got a leaking valve or a structural issue, it won't pick it up. So what we are addressing is that big gap in an EKG, which is a really big deal. We're doing something that's never been able to be done before. So, what you're going to have is a frontline physician when you go for your annual physical who can properly assess whether you've got an issue and you should be going to a cardiologist, or you don't have an issue and you don't need to be there.
Understood. Okay, so what I want to do first is I want to get a deeper understanding of what exactly MyoVista is as this product relates to machine learning, especially, which you referenced a little bit earlier. Machine learning is, I guess you could almost call it a buzzword over the last few years, but very, very popular. How does machine learning relate to MyoVista? And as a product, what exactly is MyoVista? Can you give us context there?
Yeah. So the MyoVista, it is an EKG, and an EKG electrocardiogram basically means you're taking the electrical signals from the heart and you're analyzing those. But the trace that everybody's familiar with is 100 years old and has not been updated in that 100 years. We're applying an advanced form of signal processing, and basically that yields thousands and thousands of extra data points from the electrical signal in the heart. And guess what? You need machine learning. You need a new type of mathematics to interpret all of that information. And what it enables us to do is plug the big hole in what an EKG can do.
Absolutely. Okay, so we'll get back to MyoVista in a little bit, but I want to talk a little bit about the competition side of things too. In your opinion, or from what you're seeing, is Hard Science is the first to kind of attempt this cross machine learning with the ECG technology, or are other companies already in the space that are doing what you're doing, and you guys are just offering a new edge? What's your take there?
Well, what's happened is there's been some research organizations, people like Mayo, who are also doing work in this area of basically being able to add cardiac dysfunction to an EKG. But in terms of a commercial organization with a product, I think we're way ahead of the curve. The fact that we're going through a de novo regulatory process with the FDA basically means nobody is currently doing this. Nobody has a clearance for this, and so we're going to be one of the very, very first companies that has an FDA clearance.
Okay, and building on that point too, right? I want to dig in a little bit there. With your technology getting the FDA approval as you get the resubmission, the revalidation, how different is the process of getting an ECG going to look like with your product compared to existing ones that already have FDA clearance?
No different. So, and this is the great thing. So if you're a physician, you're going to place electrodes in exactly the same way as you do today on a patient. You're going to run one test, 20 seconds long. You're going to get all of today's EKG information. And on top of that, you're going to get really valuable information on cardiac dysfunction. And that's why it's going to be so valuable, because the big issue at the moment isn't cardiologists assessing heart disease. The reason why heart disease is the biggest killer and the biggest spend in healthcare is because people don't get found out early enough.
Understood. Okay, before we talk more about MyoVista and get back into the technology, I want to talk again about the pre-revenue side, right? You guys are obviously an up and comer and you have a ton of potential in front of you. Give us a
Yep.
little bit of a deep dive here before we talk about the technology side more. What is the roadmap to going from pre-revenue to revenue producing and ultimately revenue positive? Where does that roadmap lead you guys over the next couple of years?
Yeah. So obviously, the EKG is actually one of the most ubiquitous medical devices in the world. We need FDA clearance, but once we have that, we should become, or we expect to become, profitable very quickly. There's estimates of 1 billion ECG tests undertaken every year. In the US alone, there's over 100 million. So when other companies talk about a TAM of 5 million tests a year, I say to myself, our opportunity is way more significant. So what we have is we have a razor blade business model. So so the electrodes that we supply, which you need for our test, because we're analyzing a lower level electrical signal, basically mean that we get a small revenue from every test. And just to scale that, if an EKG were used once by a physician, we'd get about $2,000. Now, in regular use, they could be used between 3 and 30 times a day. So we would get a lot of revenue from every device that's placed in the market.
Understood. Okay, with the roadmap kind of laid out in front of us of where you guys are going, I want to go back and talk a little bit about the FDA approval as it stands right now. What do you guys need exactly to get that approval? I know 3 to 6 months is the timeline, but what are the steps that are going to need to be taken to clear that approval and move things forward?
Yeah. So just to correct you there, 3 to 6 months isn't the time frame for approval. We would expect approval in 2023. But the fundamental thing that the FDA asked us to do, which is kind of a change in the way that they look at things, is they wanted us to provide some additional patient validation data. So we're working with 5 US institutions. We're working with Rutgers, Robert Wood Johnson as the core lab, and that will be 600 plus patients, which will provide that data to the FDA. So that process of finishing up the patient recruitment is, probably about 3 months away. And once we have that data, we'll be very quickly resubmitting.
Got it. Okay, perfect. That's what we needed to know. So switching back to the topic of AI, again, as I mentioned, you guys are obviously an up and comer. You're at the forefront of this AI kind of technology. But in your opinion, if you look at AI as a sector as a whole, how much potential do you believe this industry has? Obviously, with what you're working on in relevance to the AI sector, how far do you think it has to grow? How far do you think this is going? And how much potential do you think AI has as an industry?
Well, I mean, AI is going to be applied to everything. I mean, more specifically in healthcare, there's a myriad of AI-based devices coming out, which are really good about making a physician's life easier, providing more accurate information, providing information in an easier to interpret manner. And it is. There's no doubt it's going to be the future. It's a bit like saying, when in the early stages of a motor car, is it going to replace the horse? Well, of course it is. I mean, it's going to be the future. For us in EKG, the reason why this is really exciting is that it's going to change the landscape for heart disease. The big challenge, which I'm repeating, is addressing early stage, frontline physician-based determination of whether you've got heart disease. People like Apple are doing that in a consumer environment, but frontline physicians need medical grade equipment, which they don't have today, because we have a ridiculous system in the US where 80% of the people being referred to cardiology have a negative outcome. So think of the billions and tens of billions of dollars of that testing, and yet most people find out they've got heart disease through an adverse event. Well, having a heart attack is not a good way to find out you've got heart disease. You want to find out way earlier than that, and that's what we do.
Outstanding. Okay, and I want your take on this too, right? I think sometimes, especially in the older segment of the population, there's this perspective on AI when it's coming into healthcare and our physicians' worlds and going to our doctor's appointments, where it may be sort of a concept that's hard to grasp, right? You're used to your physician being the one that's dealing with you. When AI is being introduced, and especially, like I said, the older segment is looking at the future of AI, like you said, being attributed to everything. Do you think there's a bit of a difficulty in grasping that and getting used to that concept in some of the population?
Um, there may be, but what I would say is people shouldn't think of AI as being kind of robots that are going to be uh, diagnosing you. It's making medical equipment more accurate and more easy to use for your physician. So you're still going to need a physician. And I don't know whether people remember the film about the ladies who were doing the computing for NASA. Well, we're moving from people doing, kind of basically text-based things in order to a system where mathematics can provide much, much faster interpretation of results. And that's all it is. It is the ability to assess data in a much more effective way to produce more effective results.
Got it. No, I think that's a really important distinction to understand. Once MyoVista is released, do you guys plan to pursue other AI-driven healthcare solutions outside of the ECG space, or are you guys going to remain in the space while you're continuing to innovate what MyoVista is and stay along that line?
We're a specialist in EKG, but our first algorithm is basically to assess early stage cardiac dysfunction, which is called diastolic dysfunction, which is the first manifestation of all forms of heart disease. But there are many, many opportunities to have other algorithms, which we are already seeing in research. So those could be later stage heart disease. They could be whether you've got valve disease, whether you've specifically got coronary arterial disease. But our first algorithm is about screening for heart disease. Have you got an issue? Do you need to go to a cardiologist? So we're going to stick to the EKG for a while. There's a lot of mileage in this. I mean, in the next 10 years, I think no EKG company will exist if they don't add this to their product. And we had an article published in the Journal of American College of Cardiology, and basically the editorial commentary was referring to what we're doing, which was assessing cardiac dysfunction with an EKG. And the statement was, this is the biggest revolution. This is the biggest update to an EKG since its inception. Well, given it's been around 100 years, that's a pretty big statement by the cardiology community.
Absolutely. I think it provides a lot of perspective on how big this market's going to be and how important it is for people to get in and start innovating like you guys are doing right now, without a doubt. Now, I also want to talk a little bit about the market too. Again, we talked about the pre-revenue side of things, but in the light of everything that you're doing, you guys are still an early stage company. We've obviously had a market downturn the first half of the year, and the markets have been rough since January. How has that affected you guys? Has it affected your ability to operate, your ability to function, your funding side of things? Has the market affected in any way what you guys are able to accomplish?
Well, I mean, our public listing took place. We got kind of whacked on the valuation, and our current valuation is, I think I looked this morning, about 12 to $15 million, and we've had $60 million of investment in the company. So, that was the painful thing. Is it was the valuation, but I guess that's a big opportunity for people today. But what we managed to secure was the funding to, move forward, to get ourselves through the FDA process, and to get to revenue, because once we're in revenue, like I say, the market is absolutely enormous. ECG is one of the most ubiquitous devices in the world. There's up to 1 billion ECG tests undertaken around the world. And having a product that can basically add to an ECG, I see that's pretty valuable.
Absolutely. And take us through your strategy too, as you move towards being a revenue focused company. What's your strategy of getting your products out there into the market? Is it going to be a direct sales team, distribution centers? How are you guys going to get out there into the market?
Yeah. So in the US, we'll have a direct sales team. But remember, we're going to be focused on frontline physicians. This isn't really a cardiology play. For us, cardiologists are about thought leadership and credibility. So there's 220,000 primary care physicians in the US. You've seen that there's a massive explosion in retail screening. People like Walmart, Walgreens, who are putting enormous investment in frontline tools. So those are the markets that we'll be addressing, providing equipment to people who can run the frontline testing. And for those people, because we're only charging a tiny part of the charge, they will make a lot of money out of every Maya Vista that they buy. I mean, we're talking about a $50 test here. This is not going to be a $1,000 test. This is a $50 test for people.
Sure. And you mentioned the U.S. market there too, specifically, right? And U.S. physicians. Are you already planning on going international? Is that something that's down the road, or is it already something you're capable of? What's the plan there?
Yeah, so we've actually done a lot of early evaluation work outside of the US, and we've signed about 10 distributors who are kind of chomping at the bit to get going once we have the final product that's going through the FDA. We will do that through distributors because clearly you don't want a worldwide direct sales force. And, those distributors have essentially paid for a lot of user feedback on the device to get to where we are today. And I would imagine we'll start engaging with those very quickly once we make our FDA submission.
Outstanding. Well, looking forward to seeing that come to fruition. Obviously, again, as a pre-revenue company, there's nothing but potential here. You guys have a lot coming on. Andrew Simpson, Chairman and CEO of Hard Sciences, thank you so much for being with us.
Thank you. I appreciate it.
Our pleasure. Andrew Simpson from Hard Sciences joining us there. We've got another presentation coming straight up. This one, trading on the OTC under EDTXF. Dr. John Kellum, the Chief Medical Officer, and Chris Cito of Spectral Medical joining us together right here. John, Chris, thank you for joining us. How are you guys?
Great. Thanks, Michael. Thanks for having us. Before we start, sorry, we also trade on the TSX under the ticker symbol EDT.
Good note. Thank you. Yes, also trading on the TSX. Guys, it's a pleasure to have you with us. Thank you so much both for being here. We've got a lot to dive into. Before we get started on anything else, I know we've got some slides and some presentations to bring up that you guys will talk through. But one of the first things we want to start off with is both of you, if you can give us your roles, a little bit about what you do with the company and what the company Spectral Medical is focused on.
I'll start. I'm Chris Cito. I'm the CEO of Spectral Medical. I originally joined this organization back in August of 2019 as the CFO, and we had some succession planning and moved into this seat back in April of 2021.
John Kellum, I'm a Chief Medical Officer. I joined the company in March of last year. My background has been in academia as a practicing intensive care physician and sepsis researcher.
Outstanding. Guys, one of the things that we're really grateful that we get the chance to do on All Access is we get to talk to members of companies that are making big strides in their space and talk face to face and bring their stories to retail investors. And I kind of want to start with that perspective here. John, I want to start with you, but I want to hear more about your perspective on what the most important part of the role of Chief Medical Officer is in a biotech company. What are you focused on? What should the priorities be? And then Chris, right after that, same thing as a CEO. What are your priorities and where should your focus be in your roles in a biotech company?
Well, I mean, I think it's specific to the biotech company, right? So the stage of development that we are, my role is primarily around, conducting the clinical trials, ensuring the integrity of the trial, as well as the medical device, and how it fits into the market, how it fits into clinicians' practice, what we need to do to drive adoption. It's really that package, I would say, of activity.
Yeah, Michael, I think it is the role of CEO. Certainly, it's setting the direction of strategy around the organization. But I think more importantly, having great technology is just one thing, but actually driving shareholder value with that technology is probably the most important thing. And so, one of the big things is, how do we as a developmental company really get our story out there and ultimately get our product out there? And certainly we've done that on the PMX side of things, entering into an exclusive distribution arrangement with Baxter. So, that's step one, and really de-risking the organization from a commercialization perspective.
Outstanding. Guys, great for us to know going into the rest of the discussion. You mentioned Baxter there, and Chris, we're going to get to that. We want to talk a lot more about that, of course. But where I want to start and kind of guide the conversation and to understand more about what you're working on and why it's important, let's talk a little bit about endotoxin. It's a very important part of what you do. What is it, and how are you guys looking to negate its effects?
So let me take that one. So I think first of all, endotoxin is a bacterial toxin. It is a part of the bacterial cell wall of gram-negative bacteria. It resides. These bacteria reside in your gut. So even if you don't have an active infection with that particular organism, any infection and several other forms of critical illness cause this endotoxin to leak out of the gut and make you sick. So it contributes significantly to the pathogenesis of sepsis. We've known that for many years. There was a lot of excitement, I would say, 30 years ago about endotoxin being a sort of a target for pharmacological therapy. Those trials failed in large part because there wasn't a good way of detecting endotoxin in the bloodstream in those days. Endotoxin resides inside of cells, and so it's hard to measure. So when we as a company, and this long before I joined or Chris joined, but when this company developed a diagnostic for endotoxin, it was sort of a no-brainer to use that diagnostic to identify patients that could be used for that could be treated with a therapeutic. And so what we're working on now is bringing actually therapeutic with an enormous amount of worldwide experience and safety and efficacy data to the United States with what I would say to be a harder regulatory environment to bring it forth to make it available in the U.S. market. It probably is around a third to half of all of the septic shock population have high levels of endotoxin. So this is not a therapy for all patients. It's a precision medicine intervention.
Understood. Okay, and I want to talk about some of that recent news, part of with this septic shock that you just mentioned. But your recent news, the U.S. FDA granting you the medical breakthrough device designation for PMX for the treatment of endotoxemic septic shock. This is expected to help accelerate your regulatory review. What comes next for this, and why is it so significant? This is a huge development for you guys, but give us a little color on why.
Well, it's significant, I think, on a lot of different areas. First of all, we didn't apply for this initially because we were already fairly far downfield when the breakthrough device program became available, and therefore, we didn't think we qualified. But as the data from the non-clinical trial became available, we have that data, and we could put that data in front of the FDA and say, hey, we now have new information that we didn't have, previously. Can you look at this and see whether we fit into the breakthrough designation? And so the decision should be seen, as an endorsement of sorts of FDA in terms of the quality of the existing data. Now, we haven't enrolled that many patients into the trial as yet. We're still only about approaching a third of the way through, but that's what the FDA looked at in addition to the rest of the information that's available on the product.
And Michael, what I would, sorry to interrupt, Michael, what I would say is that breakthrough designation, device designation status that was granted by the FDA is just what I would say is another validation of our work with the FDA in terms of how this trial has been designed, and how we think how the FDA has been basically very supportive of our endeavors to get this across the line from a regulatory perspective.
100%. And Chris, I want to follow up on that too, because you mentioned in the press release, you believe the trial is, quote, significant given the prior clinical data from the Euphrates trial. Give us a little more context on why you believe that's the case and what the Euphrates trial was as well.
Well, I'll let John speak to that because that's much more scientific, but certainly we ran a trial previous to this, and basically it formed the basis, or a post hoc analysis formed the basis for the design of the Tigris trial and how it's been de-risked. So, John, maybe you want to give some specifics around that.
Yeah, Michael. I think it'd be important to sort of step back a little bit and review the history, because it's actually quite unusual sort of pathway. The company conducted the Euphrates trial some years ago. I think it was sort of back in 2017, 2018, that kind of range. And the trial overall was negative. There was in some of the analyses there was a small benefit, but it was it was too small to be clinically statistically significant, or even though it may have been clinically significant. And the FDA basically said, well, don't go away. There may be a subgroup of patients that would be this would be effective in. Certainly there were no safety concerns. So take a look at your data and come back to us if you think there's any chance that this could be utilized in a smaller group. And that wasn't a terribly attractive statement initially, but as the scientists began to look at the data, it became very clear that there was a subgroup of patients that had such high levels of endotoxin in their bloodstream that no therapy really could have made a difference. And this is sort of like the equivalent of having, patients with stage 4 metastatic cancer in your cancer trial. And if you take those patients out, there was a pretty sizable difference in mortality in the remaining patients. And so you took that data back to the FDA. The FDA said that, sounds very interesting. Obviously, you need to do some further prospective work to validate and confirm it, but you can do a smaller confirmatory trial, and we're happy to work with you on that. So that was sort of the genesis of where we are right now, where we've honed in on a subgroup of patients. It's a fairly large subgroup. It's about 83% of the initial patient population. We're only taking out about 17%. But when you take that 17% out, you focus on a population that is treatable, I would say. They have high levels of endotoxin, but they're treatable levels of endotoxin. And that's where the benefit seems to really come from.
Got it. Now, you've also mentioned before, too, that you feel that your approach here is de-risked. Can you talk a little bit about why you believe that's the case and what factors have led to your approach being de-risked?
Well, I think there are two aspects of that, and I'll talk about the scientific aspect and then let Chris sort of talk about the commercial aspect. But I think from a scientific perspective, the trial is de-risked for two reasons, right? One is the one we just talked about. It's based on, prior work, which has shown us exactly what population the therapy actually works in. The FDA actually let us take this a step further, which is, again, unusual for them. It's much more common in cancer trials, but they're allowing us to use a Bayesian statistical analysis approach, where we actually don't just base our assumptions on the prior data. We can actually use the prior data. It's weighted a little bit differently. You de-weight the prior data a little bit because it's prior data, but when you pool it with the prospective data, so we already have sort of a leg up on where this trial is going even before we enrolled our first patient. So that really significantly de-risks the study from a scientific standpoint.
Got it. Okay, great info there. And I want to shift gears just a little bit, but talk about the commercialization path and the partnership with Baxter. Obviously, very exciting news. Chris, can you give us a high-level overview of the partnership with Baxter and what makes it so important?
Yeah, so a couple things. I think what's most important is that Baxter is probably the perfect partner for us for this kind of therapy at the end of the day. It's a therapy that's delivered in the ICU. Baxter themselves have over 40% market share of installed critical care devices in ICUs across the U.S. They've got a massive sales force. So one of the things in terms of what our agreement is, it's an exclusive distribution agreement throughout North America. And that means that Spectral doesn't have to spend a penny more or a penny or a dime, et cetera, on any marketing, sales efforts, et cetera. Our only burden is getting through the regulatory pathway. In terms of some of the features around this exclusive distribution agreement, what I would say is it's a pretty robust agreement. There's a series of milestone payments. The first one was paid, it was $5 million US upfront, just sort of the price of admission to get granted exclusive distribution rights. But I think where the gravy is around all of this and where the real juice is the distribution economics. And so, we didn't necessarily disclose the exact distribution economics, but what I would say is that these arrangements are typically revenue sharing arrangements, and typically are around 40 to 60% net revenue pricing back to the owner of the product, which would be us. Our gross margins are somewhere around 70%. So one thing I could tell you about the opportunity is that if market penetration at the end of the day or patient penetration at the end of the day lines up with Baxter's market penetration of, call it 40%, we're looking at somewhere around, call it 200 million plus net EBITDA contribution to Spectral at the end of the day. So it's a massive opportunity. It's the right sales force. It's the right partner. We've got a product that is getting pretty close to near-term approval in our perspective. Now, John will argue a different perspective in terms of what market share we should be taking, given that there is no other therapy out there, nothing on the horizon, nothing close to being approved in the world of septic shock, specifically endotoxemic septic shock. And so why shouldn't we actually have 100% market share? And so, the total market available is, north of 1.6 billion annually. So it's a massive opportunity. And what I would say is, for an organization or a publicly traded company like ours that has a market cap just north of 100 million, it's a wild discount to what the opportunity is here. The fact that we could be generating net EBITDA of north of 200 million, and we're trading at just north of 100 million Canadian.
No, it's incredible. And John or Chris, feel free to jump on this too. But I want to probe just a little bit further. The Baxter opportunity is huge. And of course, with the reach that they have, it gives you a ton of potential with what you're producing. But what factors do you think it was about you? And I think you alluded to it already, Chris, but with John talking about how this and what you're doing with endotoxemic shock sets you apart entirely from the market. Do you think that was the factor that led Baxter to kind of initiate this partnership with you? Or what other factors do you think there were that set you guys apart from the rest of the market?
Yeah, John, do you want to speak to, I think, the precision medicine nature of our product, and the fact that it's been utilized globally for 30 plus years, great efficacy, great safety profile, but it also is a premium priced product, and obviously with that comes premium margins. So.
Yeah, I mean, I think the precision medicine hook is actually the thing that was most attractive to Baxter. Baxter's had therapies in the market for many years that are more general in the sense of for support of renal failure. They have a membrane that has a broad spectrum of removal of what I would call inflammatory mediators. So they already have a lot of sort of generalist wide application sort of devices. But as the field moves much more into a personalized medicine sort of arena, you're going to want to complement that with very specific technology, such as ours, to kind of go after this particular molecular phenotype that is this form of what I would call very malignant septic shock. You have to remember that, as we've gotten much more clinically precise in terms of defining sepsis, there are many patients that have a very mild outcome, and similar to COVID, not everybody with COVID ends up sick and dying. There are patients that have sepsis that stay in the hospital for a few days and go home. We're targeting the population that has a mortality rate north of 50%, and that requires precision medicine kind of approach.
Outstanding.
I think Michael, one other thing that I'd like to touch point on is just I think products like ours and products that align with Baxter's as well. We're in the blood purification space, and we take things out of the body. We're not putting things in the body that need to bind and then get cleared out of the body. We are very specific, and we're very targeted.
That's great. No, guys, and before we get too close on time too, I do want to cover the dialysis side of the business because there are some exciting developments there too. You are working on getting regulatory approval for an in-home use dialysis device. Tell us a little bit more about what you're working on there. Why is it going to matter though? And what's the potential for this once it's approved?
Yeah, Michael, it's a huge untapped market. There's certainly high, massive growth in this space, especially in the U.S. There's a whole population that whether it's demographically are going to be in need or have chronic kidney failure or disease, and with the tailwinds of the pandemic, to do more home care type things. It is the trend of medicine in the U.S. I'll leave it to John to speak specifically on what our device does and how it's differentiated, and some timelines around that, at least path to approval for ourselves.
Yeah, real quick, I'll just comment on the technology. So, this technology came out of a desire for Spectral to have a platform to run the PMX hemoperfusion device on. And so long before there was an agreement with Baxter, we were really convinced that we needed to offer both the cartridge as well as a device to run it on. And we couldn't be, relying on partners out there. Now, Baxter turned out to be a wonderful partner, and probably preclude the need for this now, but initially our goal was to have something that we could run it on. Now there's a device that runs hemoperfusion in the ICU. You don't typically have a standalone device. You also make that a dialysis device because the technologies are very similar. So we developed a dialysis equipment for the ICU. This is a much smaller market than we would be talking about for chronic dialysis and home dialysis. But the device was designed to be very, what I would call very user-friendly, sort of up to 2021 standards, 2022 standards in terms of, it's much more, its interface is much more like an iPhone than a piece of medical equipment. So with all of that sort of human factors engineering built into the device, it makes sense to think about using a device like this in an environment where the user really needs a lot more support, right? So, you can train a nurse to use just about anything, but a patient really needs a lot of reminders, a lot of, intuitive technology to operate. And this device has all of that. So making it available as a home device with very few tweaks to make it, take it from being an ICU device run by ICU nurses to a device that would be run by the patient at home is actually a fairly easy conversion for us. And so the devices that we have, one is called SAMI, which is the device for the ICU, and the DIMI device is a device that's already approved for in-center use, by dialysis nurses. But it's really the goal is to make that device available for home use, and that's where we're engaged in a clinical trial, a small clinical trial, because the FDA, once you've already have approval for the device, the FDA just requires essentially a feasibility study to show that patients can actually use this equipment.
Understood. Okay, and I have a lot more questions on the dialysis side. I wish we had more time to get to them, but we are drawing close on time. I know we're going to discuss this again soon. Chris, really quickly as we end, any other big developments on the horizon for the second half of this year? It's already been action-packed in the first half of 2022. Anything else we should keep an eye out for?
Yeah, I think what we should look out for is what we do believe is going to be accelerated enrollment into our Tigers trial, and line of sight to the finish line there. And I can almost sniff it. We are, where we sit with preliminary data, we are exceeding expectations. And we've got an excited partner in Baxter that has committed a ton of resources to this product and this product launch. And so, it's I'd say near-term horizon. And so, as I spoke to valuation of this business relative to the opportunity, I think this is a perfect entry point to get in on this story.
Outstanding. Gentlemen, thank you both. Dr. John Kellum, Chief Medical Officer, Chris Cito, CEO of Spectral Medical. It's been absolutely informational, a ton of fun. Thank you so much for joining us.
Thanks, Michael.
Thanks, Michael.
Thanks for having us.
Thank you, gentlemen. Joining us there from Spectral Medical, trading on the OTC is EDTXF and the TSX as EDT. Our last presentation of All Access, we're going to keep moving because we did draw tight on time there, full of information on that one. We're going to bring on Brady Grenier, the president of BioCore RX, trading on the OTC as BICX. Go ahead and get moving here. Brady, thanks for joining us. How are you?
Thanks for having me. How are you? I'm good.
Always a pleasure. Yeah, Brady, we've had the opportunity to work with BioCore on a lot of different things over the last couple of months. Always a pleasure to speak with you guys, and we're excited to dive in here. But to get things started, give us an intro to BioCore RX and what the company does.
Well, BioCore RX, we've been in business for around over a decade now, and we started out as an addiction, a management company for an addiction treatment center treating alcoholics. So we evolved over the years, and we developed programs for treating both alcohol and opioid use disorders, whether it's cognitive behavioral therapy, peer support. And then in 2016, we formed a subsidiary, BioCore RX Pharmaceuticals, because we saw the need to take a particular product through the FDA approval process that would fill a void in the treatment space of medication-assisted treatment. So we started on that journey back in 2016, and that's probably mostly what we're going to be speaking about today is that product. That's an implantable naltrexone pellet for which we just started clinical trials.
Yeah, it's actually the first point that I wanted to discuss too, but you just announced the first subject dosed in that clinical trial. Can you tell us a little bit about, first of all, how that's going, the clinical trial as a whole, but ultimately, if this goes well, if things move on to the next phases, what's the plan as this moves forward here? Why is this going to matter so much?
Well, the reason why this product is needed, first of all, is because of compliance or lack of compliance when it comes to patients that are suffering from opioid use disorder or alcohol use disorder. Naltrexone, the drug that's in our product, has been around for decades. It's a very safe medication. It's been approved about 5 times for different indications by the FDA. It comes in a pill form and a once-a-month injectable form. The problem is compliance. So without the compliance issue, there wouldn't be a need for our product. So our product is being designed to last 3 months once it's implanted in the fat tissue. And that's very important to give someone 3 months or 90 days of being free of drugs or alcohol, because a lot of rewiring of the brain can take place in that period of time. That can change their environment. It gives them a better chance for long-term sobriety. So that's why this product is very important and very, very needed.
Absolutely. And I want to kind of talk about the distinction here a little bit too, as an implantable biodegradable pellet. That being said, I think you've kind of already talked about this, but I want to get some more details on it. What are the advantages that an implantable pellet has over other common medical options like a pill or something else? The implantable side is a little bit unusual, but what makes it so different?
Yeah. Again, going back to the compliance. So, the thing about the nature of any kind of addictive disorder is that those cravings, the thoughts are intrusive. They're never ending. And that's oftentimes what leads someone to fall off the wagon, so to speak, is that craving. So if we can mitigate those cravings, reduce those cravings, eliminate those cravings, you're giving someone a better chance of success. So with a once a day pill or a once a month shot, while those are good, they're only as good as people will take them. So inevitably, the next day comes, that craving's there. You have to decide all over again, the pill or the substance or action of their addiction. Same thing with the once a month shot. That's a better mousetrap. But again, that's going to wear off prior to that month or around that month mark. And those intrusive thoughts can come back if they haven't changed their environment in that time. Those triggers can come back. So the goal here is to give someone that drug delivery for a long enough time to let the brain heal, the environment change. And that's what's so important about this medication.
Absolutely. And I want to get your personal take on this for a second too, Brady. But the topic of addiction is a very sensitive one. It's obviously one that is pervasive in all different parts of our culture and our lives. But what inspired you personally to get involved with BioCore RX, especially in this treatment of addiction, what you guys are doing in your industry? What's your driving force for doing what you're doing?
Well, I was a registered nurse in my previous career a long time ago, and I worked in the ER and came across addiction quite a bit while I was in emergency room. And I had never heard of naltrexone back then, and it was FDA approved when I was practicing as a nurse. And I do have addiction in my family, like most people do. I don't know anyone who doesn't have someone in their family that's suffering. I have both opioid use disorder and alcohol use disorder prevalent, in my family, very close relatives. So I think everyone has a personal story. But I came across this product over a decade ago, and I was fascinated by it because I saw a bunch of patients that had been treated with a similar product that were taken to approval. Long story short, naltrexone implants have been around for a quarter of a century. They from compounding pharmacies, so they're not FDA approved. They're just kind of off-label use, and but they do exist around the world. So that's what we saw. You can see firsthand how well these things work, and that kind of sucked me back into the medical field when I came across this product, and I interviewed many patients that were the patients of this clinic, and the results were fascinating. I'd never seen anything like it. I was wondering why haven't I heard about this? And I was in the medical field for many years. So then I dug in and I saw the need, I saw the void in the space, and I saw this product needed to be FDA approved. And doctors are waiting for it because many doctors won't do off-label things or compounded products. They're waiting for the FDA version. So the customers are there, meaning the doctors are there waiting for this product to be approved.
Absolutely. Now, Brady, guiding the rest of this conversation going forward too, I know you've got a deck or at least a flyer and a couple of slides we wanted to bring up. We can bring those up on the screen if there's anything specific you want to go through on there.
Sure.
But we'll get those on the screen. Anything in particular that you want to discuss while we're getting this up here, especially about your products and the company as a whole? Anything that you want to kind of display for us?
No, I think it's just, well, it's probably going to be in the slides, but I think the important thing to note is that, just to look at kind of where we've come from over the last few years. And we founded the pharmaceutical subsidiary in 2016. We met with the FDA in 2018. It's important to note that we are funded by NIH and NIDA. We received our first grant round in 2019. We spent the entire pandemic in our preclinical studies that were required. And then we received our IND from the FDA in 2021. Subsequent to that, we received more funding from the NIH and NIDA, and which enabled us to move on to the clinical phase, of which we just dosed our first patient a little over 2 weeks ago. So we're very excited about that. That was a very big milestone moment for our company to finally be a clinical stage company and dose that first patient. So now we're currently screening and enrolling, and hopefully we can finish filling the study up over the next few weeks. That's our goal. We don't anticipate it being too difficult. It's a single trial site, and they seem to have a grasp on a large patient subject database to get them recruited. So, I mean, very, very big things for us in 2022. Huge milestones. We'll be in clinical studies the rest of this year, and hopefully we can have some interim data by the fall on how the study is going so far.
Terrific. And Brady, I want to talk a little bit too about, you guys have mentioned how, this is a challenge that BioCore is ready and willing to take on. Again, the addiction side of things, a very sensitive topic, but I want to talk a little bit about the funding side of how you guys got to clinical trials. You guys bootstrapped your way here. And I want to talk a little bit about the financing side and how difficult that was for you guys. How did you get to clinical trials with the funding issues that you faced? How did you get to this point already? And what were some of the challenges that you overcame to get to this clinical trial that you're carrying out now?
Yeah. Well, as I just mentioned, we are fortunate that we have the assistance of NIH and NIDA. Back, I think it was 2018. They launched a HEAL initiative with $1 billion or so to battle the opioid epidemic, which has not gotten any better. In fact, in 2021, I think we had 107,000 overdose deaths. So it's going up. The pandemic didn't help. But we did bootstrap it along with this grant. We have used investor money along the way. We've done a good job of raising funds over the years as a small company. I think we've raised probably over 10 or 15 million, somewhere in that nature, over the last few years, coupled with the NIDA and NIH funding. We also just received, I think earlier this year, a supplement of another 100,000 from NIH and NIDA. So we are confident that we can continue to get the funding that's needed as we continue to progress and hit those milestones. But we have bootstrapped it. But we've been able to do that because we've been able to attract a really sound scientific advisory board and band of consultants from around the world, actually, because they really believe in what we're doing and see the need for it. They really appreciate the fact that we're also looking at the entire disease process. We're not just focused on having a pharmaceutical on the market. We have the behavioral therapy programs, the peer support, because this disease is not just a medication approach. You can, it's very helpful, but the medicine's a tool. We really have to look at the entire disease process. And once we can help them with the medication, then we need to look at changing that environment, changing those behavior, give them the tools they need for long-term recovery. Our goal is not for them to be on our medication for the rest of their life. It's to use this medication as a tool, as a crutch to get them, and they can always come back to it. But to answer your question, because of that the need for this product and everyone having our investors that are involved, that they all have a story, they all have a family member. So it's one of those feel-good investments that people can make because they want to make an impact and change lives and help with this, epidemic. And in speaking of opioid use disorder or overdose addiction, when you look at the alcohol side of it, it's a bigger problem that you don't really hear much about. In fact, I believe it's like 140,000 people die every year from the effects of alcohol. That's more than opioids and meth combined when you talk about death. So you're looking at this product is also great for alcohol use disorder. So we're looking at a market where there's 250,000 people dying per year from these substances, alcohol and drugs, where our medication can be helpful in treating them if they want treatment. So we're going to be looking at, penetrating that market space.
Outstanding. I think it goes without saying too, right? I think everybody on the stream would agree that anytime business and a positive cause like this and improving lives can coincide is always an admirable venture. I think it's something that all of us would strive for. And I want to talk to you a little bit. Apologies if you already mentioned this, but do you guys partner with addiction centers or treatment centers or anything like that to kind of get what you're doing in front of people that are actively seeking help for this? Or is that something you haven't really delved into yet?
No, well, the company, as I said, before we founded the pharmaceutical subsidiary, we were a management company managing an addiction center. And we evolved over the year, and we created this program, which consists of medication prescribed by a doctor, our proprietary cognitive behavioral therapy program, and our peer support, which comes in an app. So you have a pocket peer support person in your app. It has all the bells and whistles. So we offered that program to treatment centers that want to use it for their patients. We were doing that, and then the pandemic hit, and of course, all of that stuff went away. I mean, all retail medicine was pretty much gone over that time period. So we're kind of relaunching that. We're looking at getting into certain payer groups for that particular program. But the beauty of that program is that what we created is it allowed us over the last decade to build really good relationships with addictionologists around the country over those years. So we're primed for when we finally get BICX 104 approved. I mean, we have a huge database of partners that are ready for this product when it's available. So it gives us a lot of credibility with those people, because they know that we appreciate and focus on the entire disease process, like I said earlier, and the behavioral side of things, which they do. And they appreciate that we're not just a company that's let's just give you our medication and call it a day. So it really does help in those relationships that we've built over the years.
No, of course. That makes a ton of sense. And kind of along that thread, but shifting gears a little bit, I want to talk about something really interesting that we were digging into when we were doing our research. Partnering with 2B3D to pilot a first of its kind PTSD and addiction treatment solution for veterans in the metaverse setting. This was a really, really interesting one that we read. Obviously, a very cool concept. Tell us a little bit more about this partnership and how it's going to work. What are you guys doing there?
Yeah, I mean, really excited about this stuff, because you start talking about metaverse and NFTs and all these things. Like, how does that go together with addiction treatment? Very much so. It lends itself really, really, really good to help these addiction treatment, and especially their focus on veterans. But veterans with PTSD often have a substance use problem, and you really can't treat the PTSD without treating the substance use problem as well first. So it's a really interesting partnership, and the idea to kind of conceptualize what we see happening is you have someone maybe going to their doctor, they're getting their medication, whether it's our implant in the future or any medication for their substance use disorder or no medication, and then they get their Oculus goggles or whatever technology is going to be around by then, and they literally go into the metaverse, and now they can go see their therapist, their peer support specialist, their doctor, and be in a very private setting, because they can be anonymous with their avatar, and they go in there and do their treatment. And as the initial stage, our plan is to have our proprietary CBT modules that I spoke about earlier, our cognitive behavioral therapy modules, have those into the metaverse, where as they do those modules, they receive NFTs for completing those modules. So there's a reward-based factor to this, so they can go in there and earn, actually get NFTs and for completing these modules, helping them with those triggers. So when they take those goggles off and they're in the real world, they've hopefully developed some tools to deal with those external triggers that are out there. So we're very excited about this. It's early stage. We're just right now working on. I mean, they haven't launched their metaverse yet, so they're working on that on their end. But they're getting very active out there. I could see a lot of on social media. You could see a lot of buzz about those guys, and so we're happy to be a part of that and excited to see where this grows in the future. But very early stage.
Awesome. Like I said, really interesting. Certainly the first of its kind that I've ever heard about that. And when you explain it, it makes a ton of sense. But like you said, at the offset, you're looking at it and you're like metaverse, NFTs, and how does that blend with addiction? Really, really fascinating stuff. And obviously, again, very admirable objective. I want to talk to as kind of a closing point here, just about the revenue side of the business, right? Moving forward from here, how do you move forward to increasing revenues, getting your products further into the market? What does the roadmap look like for growing the revenue side of the business?
Well, on the BICX 104 side, obviously that's pre-revenue. We have to get that through approval. So hopefully that's something that we can accomplish in within a couple of years. Just depends how this the study goes and the enrollment goes, which we anticipate will be fine. And looking at potential partners coming in prior to approval, we're starting to entertain that. So revenues could come from that front on partnerships prior to approval. We can also get more grant revenue. We're actually planning on submitting for more grants as well for other indications. This product is not only can be effective for opioid use disorder and alcohol use disorder. There's a couple of other indications that we know anecdotally it will be effective on. So we'll be working on securing more grants for that. And then on the other side of the business, like the metaverse and these types of things, we are looking at generating more revenue on that program now that things have sort of picked up again post-pandemic. We're starting to see some increase in that side of the business, and so hopefully by the fourth quarter we'll start seeing some revenue start trickling in from that operational side of the business that's kind of coming out of relaunch post COVID. I don't have any guidance on that yet. I don't want to speak for the CEO and my CFO on what the projections are on that, but I'm focused more on the R&D side and what's going on with BICX 104. So that's where I think most of the inflection points will happen in 2022 is as we progress through those studies and have data. I think that's where the value proposition will be for us for the rest of 2022.
Outstanding. A lot to look forward to. Brady Grenier, president of BioCore RX. It's been an absolute pleasure having you with us. A lot of exciting stuff here. We're looking forward to chatting with you again soon. Thank you for joining us.
Likewise. Thanks for having me on.
Brady Grenier, president of BioCore RX. Having them on as our last speaker of All Access for the day. We've got a couple of things to wrap up here. But again, one point of note, next week we will be changing a few things up. Different format for All Access. Going to bring a couple of different items here. A news update from Aaron Bree at the beginning of the show. I've not told him he's doing that yet. I'm going to brainstorm it with him after him. Maybe I'll buy him lunch and see if I can talk him into it. But other than that, we're going to wrap up with another video from our sponsor, Ticker, from the show. Of course, you can get involved with Ticker going to ticker.com, TIICKER.com, and getting perks for your favorite companies that you own stocks in. And after that, we will wrap All Access.
What is Ticker? That's right, Ticker with two I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Outstanding. And of course, we want to say thank you to all of our viewers tuning into All Access every Friday and all of our presenters and companies that participated in All Access today. You can get in touch with any of the companies from the content on benzinga.com. Follow them more on their social media channels. And of course, tune into All Access next Friday right here on Benzinga's YouTube.